Hi there and welcome to our channel. In case we haven't met before, my name is Sarah and I'm here today with iHealth Brokers for a very special collaboration with Zach Smith from OnCashFlow. Stay tuned. Welcome back. If you're new to our channel, please make sure to subscribe, and whether you're new or old, please make sure to like this video. So at iHealth Brokers, we are licensed health insurance brokers, so if you have any questions regarding health insurance, please feel free to leave them in the comments below, and as always, we will do our absolute best to help. And you can always reach us here at iHealth Brokers at 888-410-0344. There is no charge for our services. Now, we release videos on a weekly basis that are designed to educate people about health insurance in general and specifically about how to save money on health insurance. Because although health insurance is undeniably important, it can be very expensive. So expensive, in fact, that some people forego it entirely, which we do not recommend. It can cause a big problem further down the line. Now today we actually have a financial guru here with us who's going to help give you some financial insight that may help you to save money on health insurance. His name is Zach Smith and he's a former Marine who's been saving ever since he earned his very first paycheck, which is pretty darn impressive. He's turned his passion for financial freedom into a business and he helps others achieve financial independence the same as he has. So please welcome today Zach Smith from OnCashFlow. And Zach, the first thing that I wanted to ask you about specifically is FIRE. So you talk about it a lot in your videos, and I was wondering if you could give us a little bit of background about FIRE. And for those of you that don't know, FIRE is financial independence, retiring early.
Hi Sarah, and thank you for bringing me on. I'm really excited to share my passion with your audience. So let's first talk about, like you asked, about financial independence, and I'll explain it like really briefly. And it's really hard to explain it briefly because there's just so much that has to do with financial independence. There's so much. It's really all-encompassing. But really, just in a nutshell, what financial independence, retire early is, it's gaining the ultimate financial security. So relying completely on your investments. You know, your investments are broadly diversified, and you're basically that is your financial security. You being invested, you know, in the entire pretty much world markets, the U.S. markets, the world markets, you know, stocks, bonds, pretty much everything. If you have a big enough amount of net worth invested in all these things, you are so well diversified that it creates almost a really big sense of security for you, financial security for you and your family. And financial independence gives you the freedom to choose what you want to do with your time. It gives you control over your time. So having a large amount of net worth through diligent saving and investing is going to allow you to have more choices in your life. So money doesn't dictate your actions. You don't have to do things just because you need the money. Instead, you get to do things because you want to do things. And that is the power that financial independence gives you.
Great. I know the FIRE movement has really taken hold in recent years. And for those of you that want to learn more about it, I suggest you head on over to Zach's YouTube channel, OnCashFlow, and specifically make sure to check out his YouTube video, How to Achieve Financial Independence in 10 Years or Less. That's a really good one. So Zach, you talk a lot about one of the easiest ways to save money is to stop wasting money. So what are your best suggestions? What are some ways that people are just throwing their money down the drain?
Wasting money is one of the biggest things that we in the American consumer society do. And really getting control of your expenses and reducing your expenses and just being in control of your spending is a huge part of being on the path to financial independence and just becoming better with your money. The first thing that you should always do is that you should just track your spending, no matter what you're doing. Even if you don't make any changes right now, just tracking your spending and realizing where your money is going to be a super powerful thing that you can do, because almost automatically you're going to, you know, control your spending. You're going to reduce your spending just by being aware of where it's going. And number two, the biggest thing that you can do when it comes to controlling your expenses is to focus on what's known as the big three. So the big three expenses are your housing, your transportation, and your food. If you can control those big three, you know, the biggest three expenses in your life, if you can find a way to reduce those down, pretty much everything else will fall into place if you can master those three. And then after you've mastered the big three, one of the biggest things you want to focus on when it comes to reducing your expenses is focus on what's known as your fixed expenses, or pretty much just what people would call their bills. So whatever you have to pay, like every single month, every single year, whatever, if they're reoccurring and they just keep happening, if you can focus on reducing those down to, much lower amounts, then it's going to be a lot easier to gain control of your financial life.
I know we could certainly all stand to be a little bit more conscious when it comes to our spending. Now, what about those that are already doing everything that you're suggesting? They're already keeping track of exactly what their expenses are, and they're pretty good about living within their means. What about people that want to take it the next step? People that want to have that passive income stream? What are your best suggestions for that?
And when it comes to increasing your income, that really is the other half of the equation, right? So in financial independence, we have this very basic equation that we follow where you have your income, you have your expenses, and then you have what's in the middle of that. And what's in the middle of that should be what's going towards your investments. And that's going to get you closer to achieving financial independence by building up your net worth. When it comes to increasing your income, one of the best ways that I think that you can do that is obviously you can just start investing. So that middle ground, that is going to be like the bread and butter. The main thing that you want to do is you want to put whatever you're not spending in expenses, you want to put that income towards going to your investments. And when I'm referring to those investments, usually I just refer to like index funds. So index funds are basically mutual funds or exchange traded funds that track a certain market index. And those can be comprised of, stocks and bonds. It can be comprised of real estate and pretty much anything. But when it comes to that, I think that is the number one best way to build passive income, is basically just increasing your net worth, because eventually that is going to create passive income, because once you put money into those investments, they are there working for you. That represents, if you buy a stock, that represents a company. That represents that company has employees that are working hard to make that company profitable, and all that, whether it be dividends or capital appreciation or interest paid in the form of to bonds that company holds, that is all going to go to you, and that is almost completely passive. Once you put that money in there, that company is working to pay you, the investor, the owner of that company.
Great. Now I want to talk about something that's a little bit more specific to what we deal with. I mentioned earlier that a lot of people, when they're trying to apply for insurance with the marketplace, the Affordable Care Act, ACA, they're trying to become eligible for that tax credit. Because if you're right on the cusp, it can really make a huge difference in your monthly premiums. So a lot of people are looking to lower their taxable income with additional deductions at tax time. So what are some deductions that maybe people don't know about? What would you suggest?
So if you're looking to lower your taxable income so you can qualify for, health insurance credits, there are a few ways that you can do that. And luckily, on healthcare.gov, they give us all the answers. So on their page, basically, you start with your adjusted gross income from the previous year, and then you're going to add back certain amounts of things in order to get your MAGI, which is your modified adjusted gross income. And so that modified adjusted gross income is the income that they are going to use to calculate whether or how much of a tax credit you are going to qualify for. And what you want to do is you want to get that modified adjusted gross income to be lower, obviously, so you can qualify for a better tax credit. One of the best ways, in my opinion, is like a triple benefit, is that you can just contribute to retirement accounts. So a 401k at work is a great way, because you don't actually see that money. It goes straight into your retirement account, and that reduces your taxable income, which is going to reduce your adjusted gross income, which is going to reduce your modified adjusted gross income. While at the same time, you also have individual retirement accounts, more specifically a traditional individual retirement account. So those can also reduce your taxable income if you contribute to one of those. And it works in almost the same way, except for that you contribute to it by yourself rather than an employer withholding it from your paycheck.
Definitely some good tips there. Now, the last thing that I want to talk to you about is making that jump to self-employment. A lot of our clients call us because they're interested in making the jump, or perhaps they've just done it and now they need to find new health insurance options, of course. And I know that there are some major rewards for being self-employed, but other than health insurance, what are the things that people don't know about?
So if you're trying to adjust to becoming self-employed rather than working for an employer, there are so many things that you need to keep in mind, and there's so many things that there are benefits and drawbacks to it, of course. And I really cannot cover everything, in my short response here. As far as my best tips go for making the jump towards self-employment, I think the biggest thing that you need to keep in mind is that you should probably have, some sort of buffer, some sort of barrier to basically keep you afloat during that time. So if you want to go from 0 to 100, you want to quit your job and then you want to work completely on starting your own business. That's a great thing to do, but I think that you should have some money saved up. To where you have at least maybe, let's say, 1 year of buffer, 1 year of annual spending saved up. Therefore, so you can actually don't have to worry about, where's your income going to come from while you're working on your business. So you can focus completely on your business. Most people should not just jump straight into starting their own business from employment if they don't have any extra money saved up for it in order to keep them afloat. So make sure you have a little bit of that financial security at least when you're going to jump from being employed to being self-employed.
Zach, thank you so much for being here with us today. This has been really, really insightful. I hope that our viewers have learned a little bit more about how to save money, not just on health insurance, but in general, because who couldn't use that? So again, thank you so much for being with us here today.
Thanks for having me on, Sarah. I really enjoyed answering your questions. If I could just help one person out there, then I would be happy with that. Thank you and have a great day.
Now, as I said earlier, if you want to check out more of Zach's videos, head over to his YouTube channel. That's OnCashFlow. And if you have any more questions, you can reach us here at iHealthBrokers at 888-410-0344. As I said earlier, and I'll say it again, there is no charge for our services. And I'm sure Zach would agree, that's a great way to save money. Thank you so much, and we'll see you next time. Bye-bye.